Hello, good afternoon, and a very warm welcome to the live trading hour brought to you by the Live Trade Room, where we'll be looking through these markets as some capital enters. Some US capital begins to enter this market in about 10 minutes time. So this is the US cash open. So we look to position ourselves accordingly, see where the opportunities lie. So without further ado, let's get straight into it then. As always, if we can start with our risk warning, of course, please, take note of the risks involved in trading financial markets, and of course, be aware of those risks at all times. Trading is, I suppose, a pursuit which is inherently risky, so there is no potential for return without the assumption of risk. So, but it's really focusing on that risk and making sure that you can control that risk is really what profitable traders are really quite effective at doing. Okay, so let's begin with a quick review of market moving news. You may be familiar, last night we had the FOMC. So
it's around the 10 minutes now until the top of the hour, and we get German prelim
for
July.
I'll just put that on pause there for a second, and we'll put our Squawk service back on in just a moment. So let me draw your attention to this news event last night at 7 o'clock. So we had the FOMC statement. We had rates kept below 0.25, so virtually at zero. And then we had Jerome Powell in his press conference last night, and there was some interesting reactions. We can look across the financial markets and see how these markets reacted to that. And we're also keeping an eye on the bond markets as well, as you well know. It's a strong feature of these financial markets at the moment, and they really do have literally traders and investors scratching their heads in terms of understanding what's going on in these bond markets. And the Fed themselves, Jerome Powell has questioned its sort of behavior, and I suppose there's an awful lot of quantitative easing flowing around the system, and it clearly, what it means is there's more cash and it needs to go somewhere. So a lot of it looks like it's going into the bond markets, keeping those yields lower. So just want to draw your attention to perhaps the last 24 hours, or let's have a look at the last 5 days. So we had a bit of an uptick, and then we had again further squeezes to the downside. As you can see, a little bit of a spike fairly recently, but we're back up to these levels. So what can we glean from last night's FOMC? A few things really. There is concern on the inflation side. We are seeing an uptick in surprising uptick in inflation. It looks like it's running well above the Fed's target. So inflation is becoming a bit of an issue as a result. We were discussing last night in our trade plan session that one of the main beneficiaries of a higher inflation type environment is perhaps looking at the gold market, and we've seen a nice sizable move to the upside, because the reason being gold is a hedge against inflation. So if inflation pushes higher, what you can often see is capital flooding into gold to try and offset that inflation. So the bond market is a bit of a head scratcher, as Jerome Powell alluded to himself. So we're talking about the world's top central bankers all really unsure about some of these market dynamics, and we've got to trade within that, don't forget. So that was quite an interesting FOMC. Also alluding to the vast amounts of asset purchasing which is going on in the US, over 120 billion per month. They're going to maintain that pace for some time. They are going to taper. They are alluding to the talk of tapering, but it very well may take some time from here. So we're still sticking with that 120 billion asset purchase number for now. I suppose looking forward, what sort of things can we look for that might change the policy? Two things popped up The first thing is the supply chain. So as supply chains begin to improve, a lot of them have been impacted severely with regards to COVID and lockdowns and a whole variety of sort of unusual sort of barriers over the last 2 years. And the other one is the jobs number in the US. So if that starts to improve, that might start to put a bit of pressure on the bond markets to the upside. That may push the Fed towards tapering, increasing interest rates, and then we might see some softening of the indice markets. So that's kind of how we can think about it. We'll have a look now in just a second at the advanced GDP number. So we're expecting probably the second highest GDP figure in US history in about 30 minutes. And so what we saw is a major swing from the downside impact that COVID had on GDP to a very, very significant and really wild swing. You can see the impact that the financial crisis of 2008, 2009 had on the US GDP. COVID made that look like a little blip. And now we're looking at this is only a quarterly figure, don't forget, it's an advanced GDP number, and we're looking at 8.5%. So we're looking at really tremendous recovery pace, and that's why there's been an argument, and that's why we've seen a little bit of dollar strength over the last number of months, because they are bouncing back really quite impressively. So will this figure come in line? You could argue that the 8.5% is kind of pretty much built into the price. So we've seen some dollar weakness since last night, which is pretty much what we discussed in our trade plan session last night. Dollar weakness. I'll bring the charts up now in just a second. We also have unemployment claims. So what we'll do is we'll position ourselves, we'll look for the opportunities, we'll make sure that these news events are in keeping with our overall bias, and then we may look to pull the trigger if we get the relevant price action. Nothing of any major concern tomorrow. We have a monthly GDP figure coming out of Canada. Apart from that, nothing of any major concern. So really, this is the last major event of the week as far as cross-market volatility is concerned. So we'll come back to the advanced GDP. I'm sure we'll get an update now in just a moment. So let's see what opportunities we have for you today. So I'll bring those up on screen. So last night we very much discussed the potential for the euro to push to the upside against the dollar. We also have the dollar Swiss to the downside. If I just move this level down here. So we've seen moves in those two currencies. We actually had the Aussie dollar above the S&P 500. Of course, this market pushing to the upside, the S&P, so if we're in a risk-on market condition, it absolutely supports the dollar weakness. So it kind of fits from that perspective. We'll come into these in just a second. The other market we were looking at a bit of a reversal is the Aussie dollar to the upside. So we've had a little bit of a break above that 7,400 level, and prices have kind of rolled back just a little bit. So we'll go into these three markets in just a second, but really the big move from yesterday has been this little move here above the 1809 in the gold market. So gold is historically anyway a hedge against inflation, and if inflation's pushing higher, we can probably expect a bit of a squeeze on gold to the upside. So a little bit of a bid on gold above that 1809 level. Now we're up to quite an extent, so now we'll go into each of these markets and we'll look to identify those very important levels. So let's start with the euro dollar then. So we can extract we can do a little bit of technical analysis, of course, on each of these charts. And if I just bring up, so what we can categorically assess is that this market has broadly been moving in a bit of a sideways moving pattern. Now our level to get into this to the upside was the 118.50 level, and we've broken quite nicely above that, but we also have this level of resistance just sitting up at these higher levels in here. Can I just go into the monthly? So looking at the bigger time frames, we can certainly take the monthly low. It's just slightly in the wrong place there. So so what we can now say is that we have prices just running up to this little handle just in here. I suppose it does have an extra little way to go, but what does this price action represent? It represents potentially a change in direction. So prices are continuing to push lower. When they fail to make a new low, that's when we can sit up and we can look for those reversal trades, and that's pretty much what we've seen. Prices moving sideways, and now we're getting that reverse trade. So this is technically your first opportunity above the monthly low. Now this is your second opportunity just sitting in here, so we're getting close to that. And will we see a bit of a reversal in fortunes in the euro dollar to the upside? Could potentially up to the 119, maybe the 120 level, just up in these little ranges up here. So potentially a nice little pullback move now in the pipeline for the euro dollar. So let's go into it on the smaller time frames. So we do multi-time frame analysis, of course, so we want to see what's going on the bigger time frames. That gives us a bit of a leeway into the trading opportunity, and now we can assess it accordingly. So we had the little break higher during the Asian session, and yeah, I think it was pretty much towards the end of the Asian session. So we've had this little move. We had a little bit of a pullback just prior to the European session, and we had a bit of volatility to the upside. Now on a 15-minute time frame, this is basically creating a bit of a floor and a ceiling. So this is a level of support and resistance in its own right. So what we can do now with this is we can look to get in above the 1879. This stop loss here might be too tight. It's looking like it's too tight. We're probably looking at a 20 pip stop loss. We could look at a stop loss at that kind of level, but bearing in mind the volatility in these markets, and we're probably better off looking at the 1850. So this is about a 30 pip, maybe 33, 34 pip stop loss in this trade. So I think we'll go with the 1850. So let me take that away, and we can monitor for this market to break out above the 1879 level. So it is a breakout trade still. It's a momentum breakout trade really, but high probability breakout buy trade, this time above the 1879. So if prices break above that level, we can pull the trigger on a buy trade above that level, the 1879. So let me zoom in a little bit. Okay, so the next one is the dollar Swiss. Now you can trade the dollar, the euro dollar and the dollar Swiss. You can often choose one or the other. What we would need to do is to just take this level down here. So this is your price break to the downside, but this is your close. Yesterday's candlestick is actually the confirmation of a close to the downside and as you can see, we're below the 50 period moving average as well. So we've had some continuation below that 95 level. So now what we can do is we know we're looking for a sell trade, so we don't have any issues with in terms of direction, in terms of market selection. We can now focus on these trades and try to identify where the best opportunity may lie. So again, sort of getting the initial break during the Asian session and a little bit of hesitation since. We've got a bit of a sideways moving pattern, as you can see, just sitting in here. The problem with this bit of price action is if prices break above this level here, then it's a reversal trade to the upside. However, if they continue their momentum further to the downside, which is what we're looking for, we're not looking for the reversal trade really. We're looking for the momentum breakout trade. So momentum's to the downside, and we're looking to get into that trade again down at these lower levels. So just focusing on the sell trade, we've got the 90.74 level. So prices are only 10 pips above that level. So what we can do is we can change the color to red. We can now look for we do have some interesting sort of developments for our traders here at the live trade room. From September, we'll be going to kind of more of a day trading environment, which we were doing prior to COVID. So we'll be certainly spending a lot more time with active trading during the trading day in terms of broadcasting. So we'll be. For more information, you can obviously contact us through the live trade room. We'll give you a bit of an update on that. But for those of you, of course, that are interested in day trading, high probability momentum sell trade below. So the level we'd want to pull the trigger now would be at the 90.74. 90.74. So a buy trade in the euro dollar and a sell trade in the dollar Swiss, and like I said, you can trade one or the other. So let's have a look. Let's finish the dollar pairs then, and we can. So we're looking for some Aussie dollar strength. Now we had the RBA suggest that they are a little bit on the dovish side, that they're looking to accommodate for much longer, and that's likely to put the Aussie under a little bit of pressure. It's not to say we won't get a technical move, but this would be our least preferred trading opportunity, just purely from an RBA central bank perspective. So what we can do, let's do a little bit of technical analysis here. So we're going to take swing highs, swing lows. Just on swing highs and swing lows, you want to almost identify the levels where the market respects those levels more so. So we can, when we do this analysis, we can identify clearly this level in here. We don't need to be too precise because we're talking about, perhaps a 6 or 8 pip range, which is nothing, absolutely nothing in markets like this. So we can probably identify, broadly speaking, these levels of potential support and resistance, where prices range between those levels until you actually get the breakout. And that's really what we've seen over here, is that initial breakout trade. So clearly we're getting a breakout to the upside, we're getting the pullback, and now we can look for that next leg to the upside. So hopefully that'll put it in a little bit of context. The only difficulty we have is kind of pulled back into so it's actually got to break out these levels, that 7400 level to the upside would be a better price to get into. Stop loss wise, we could certainly look at the 73.59. So we're looking at probably a 40 pip stop loss in this trade. Yeah, so have the Aussie daily sell. Is it long now? Oh yeah, so you're talking about on the daily time frame. Yeah, I think we had our profitable exit, I think, above the 7400, wasn't it? 7402. So yeah, we're now out of that sell trade to the downside, but that's on different time frames. This is purely on a day trading perspective, so really not to confuse the two. But look, on a daily time frame, so basically we got into this market on a daily time frame, for those of you that are perhaps not familiar, on a breakout of this market somewhere around here, and we had a nice move to the downside, and then you get a little pullback, and then what we were able to do is identify this little swing high in here and bring our stop loss. So initially our stop loss was somewhere like there, and then we can book in a small bit of profit on the trade with the view to actually get that next leg to the downside. So that's what we always try to do when we trade markets, is to go with the flow of the market. So this is what we were wanting to happen. And as you can see, we had a few false breakouts to the downside, and that puts a bit of question mark in our mind in terms of, will this actually move lower? And what we make sure we do under situations like that is not leave our stop loss where it is, because all you're doing is exposing, that much capital for no reason whatsoever. So get into a good routine of trying to mitigate risk wherever possible. And so this was a small profit, and I think we were allowing the market to decide when we exit this trade. And now on an intraday basis, we're looking for actually the reversal. So now this is a structural failure trade to the upside. So our bias and our bias can change as price changes. So we're not flip-flopping. There's a difference between getting into a sell trade and then all of a sudden seeing some volatility to the upside and getting into the buy trade. That's not what we're talking about here. And plus, we're initially talking about a trade on a daily time frame as well. So it's slightly longer term. We're expecting further downside. So this is why this is important on a daily time frame, is because it gives us that structural failure trade to the upside. And we're seeing some dollar weakness across the board, so it does marginally fit for now. So really, we're looking for that intraday trade now. Yeah, and I suppose just I do believe last night, no, we didn't include the Aussie dollar in terms of a potential buy trade on a daily time frame. We were talking about the euro dollar to the upside, the dollar Swiss to the downside, and actually the euro yen as well. So this little breakout to the upside here for the euro yen. So we didn't include the Aussie dollar, and largely due to the RBA, the fact that like I said, the RBA going to be accommodative for longer. So we might see further rollovers to the downside with this trade. So this would be our least likely day trade for us. Smaller time frames, this is all fine until you get the breakout to the upside. You get the pullback, you get a lower high now, and then this is now technically kind of a structural failure trade to the downside, but we are running into these levels of support and resistance. So will this become the next platform to the upside? So that's what we're looking to see happen, obviously in advance of it happening. So the 50 period moving average is just inching a little bit closer to us as well. And there's really plenty of room to the upside. Like, if the Aussie dollar picks up a bit of pace, we could really be seeing this market up to the 75.50, something like that, and we're only down at the 7400 level as we stand. So potentially a nice sort of profitable risk reward trade to the upside in the Aussie dollar. It's just, will we get it? That's the key. So because this is a structural failure now to the downside, we kind of need a little bit of a structural failure trade to the upside again. And I'll show you what that looks like. So this is your structural failure trade to the downside. Now we need the opposite. We need to push higher. We need to attempt to make a new low, and we need to fail. So it's like a, so that's our structural failure trade lower, and this is our structural failure trade to the upside. So it's above that 7400, which is the level that we were discussing last night. So that's where we're looking to get into the upside. So we can look for a, so in terms of looking at the trade itself, excuse me, let me label this correctly. So we're looking at a high probability $7,400. So because we're looking for a buy trade, we'll just label it green for you. So we're looking for a structural buy trade above the 7,400. So we can look to monitor that. So the euro dollar is getting quite close to potentially a buy trade up here at 18.79. The Swiss franc, we're only 10 pips away, of course, from that little break to the downside. And we just need better quality. So we need this market to probably roll over 5 pips and then to threaten to push higher. So we need to see a little bit more there. So the last market, and what I'm going to do as well, we've got the GDP numbers, the US GDP numbers coming out in about 15 minutes. So what I'll do is I'll just turn on our Squawk service, so we'll get a little live market update going into that event, and we'll see how price reacts, and we look to position ourselves accordingly. So let me just finish this market first. Let's see where we're at. So really an explosive move overnight again, and just continual sort of moves to the upside. So it really was that break of the 10900 to the upside. That was the deciding price, and on the daily time frame that coincides with yesterday's high. So failing to make a new low. It is quite messy. It's not ideal, but we're seeing this market. I'm trying to track as well. This is your structural failure trade to the upside. So that's why we identified this higher at that level, bearing in mind the FOMC and their surprise with the uptick in inflation, which everyone else can see it and feel it in our pockets, and fully, I suppose, will fully appreciate that prices are only likely to go up. It's just the Fed are at pains to tell us it is transitory, and prices will settle down. We're just not so sure if that's the case from a fundamental perspective, of course. This is where we got this balance between fundamentals, sentiment, and technicals. So we want to try and get some sort of alignment in our analysis. So hopefully, at the very minimum, it's kind of coherent for you, and you can perhaps trade markets with a high degree of knowledge and understanding about what's going on. And that's what we think will give you kind of an edge over time. Okay, so how can we interpret this? Let's look at the bigger time frames. I mean, we're kind of up at these highs. So normally what we look to do in a market like this is to wait for a pullback if we get one. So the natural place really here would be, you're looking for sort of recent recent highs. So this area here would be a little bit of a pullback zone for us. So for example, if we get a little bit of a corrective move, we might have to be patient with this one. But if it comes into this little area, we'll certainly be looking for that turnaround trade and see if we can kick on to the upside. Otherwise, you're actually buying at the top of a market, and as we know, when we trade markets don't move in a linear fashion. What they'll do is push higher, they'll pull back, they'll get the next leg, they'll pull back, they'll operate in this fashion. So we don't want to be buying up at this level. We'd rather be buying down at these levels. We don't want to buy up here. We want to be buying down here. So that's the kind of the basic principle. So should we look at buy? No, let's wait for the pullback, and then we'll look to get into the buy trade.
Into 10 minutes now to the bottom of the hour. We get Q2 US data, GDP advance. We're looking for 8.5% on the prior 6.4%, the range 5.6 to 11.9%. Personal consumption, we're looking for 10.5% on the prior 11.4%. With the GDP price index, we're looking for 5.4 on a prior 4.3%. Core PCE quarter on quarter, we're looking for it to move higher to 6.1% on a prior 2.5%. We'll also get the weekly initial jobless claims. We're looking for it to move lower to 380,000 on a prior 419,000, with the range of 350 to 420,000. For the continuing, we're looking for 3.196 million on a prior 3.236 million, the range 3.15 to 3.567 million. Quick note here from HSBC ahead of this US GDP data. They expect it to rise to 8.2% quarter on quarter, saying consumer spending may have increased at a 10.3% rate as economic reopening and the effects of fiscal stimulus continue to support expenditures. Both business fixed investment and residential investment may have increased as well, although supply side challenges likely were a constraint. Supply side challenges also appear to have held back businesses' abilities to rebuild their inventories. Finally, HSBC note that net trade may have been a drag on GDP growth as both imports and exports increased. This release will also include the annual update to the GDP accounts for 2021, resulting in revisions to the GDP data from Q1 1999 through to Q1 2021.
So with this news event coming out in about 8 minutes, that might give us the correction we're looking for in markets like gold. So we're looking for a pullback around the 1813 level. So we're looking for this time it's a pullback buy trade around the 1813 level. So this is the type of sort of preparation we do when we trade, where we have a process where we narrow down the better opportunities and we kind of want to focus more on them. So we do our analysis to determine, like, this could be 2 markets or it could be 6 markets. We don't know. From day to day and from session to session, they can change obviously quite quickly. So, you know, we put together our trade plan. We know exactly what we're looking to do. We know exactly what direction we're looking to trade these markets. You know, we would like to say a lot of our decision making is based on these are not emotional decisions. They are based on market fundamentals. We're kind of in tune a little bit in terms of market sentiment as well. So we're constantly monitoring the media channels and seeing what the feel is for these markets. and that kind of enters our thinking as well. And we want price to support. We want to trade the markets where the money is moving to. So we want to see the commitment of others, and that's what trading is for us. So if it's in gold, we want to focus on gold. If it's in the stock markets, we want to focus on stock markets. If it goes into the dollar, we'd like to focus on the dollar. If it's a flight to safety trade, we want to focus on the yen, the gold, the dollar, whatever the case may be, the Swiss franc. Wherever the capital is clearly moving to is kind of where we want to try to benefit from those moves. Pullback buy trade on gold, absolutely. The price here you can see up on screen is the 1813. So really pulling back to this level here could give us that next leg lower. So what I'll do is let me put in some arrows just to show you. So really from here we're looking for a push to the upside. The Aussie dollar, a little push to the upside from that 7400. We're looking for a little buy trade back at this level down here, so we do need that little pullback. And last but not least, we're actually looking for that move to the downside. So beginning of these arrows is roughly where we'd be looking to get into those trades. On a 1 hour time frame, I mean you can look at it on the 1 hour time frame. You see, this is something that causes I suppose a significant amount of confusion with traders, because if you notice, like, we'll always talk about the price. We'll talk about the price at which we want to get in, and whether that's on a 5-minute chart or a 15-minute or an hourly chart doesn't matter hugely. That will become a little bit of an issue when you look to decide where you place your stop loss. But it's not in itself the reason why you look to get in or to get out of any particular trade. So it's really the price action that should be the focus. And there's a subtlety in kind of what I'm saying.
3 minutes now for this US data. GDP annualized quarter on quarter for Q2. We're looking for 8.4%. Personal consumption, we're looking for 10.5%. The GDP price index, we're looking for 5.4%. With core PCE quarter on quarter, we're looking for 6.1%. For the US initial jobless claims for the week, we're looking for 380,000. With continuing, we're looking for 3.196 million. I have read many notes this morning that say the signal coming from initial claims will continue to be distorted by seasonal factors.
So this is the news event coming out in just a moment. We want to see how these markets react to those, to that news event. So so at the moment it's on an hourly time frame, because we can see clearly if we pull back, then we will we'll look to get in around that 1813.
It's coming through from Bank of Canada's governor, Macklem, there in the newspaper.
And then the time frame in which we use can become a little bit more important. But if I just sort of chopped and changed, really, the pullback is still to the 1813 level, and it would be on the 5-minute chart as well. It would be a structural failure to the downside, so we might see some short-term further downside price action pretty shortly. But we are going into this major news event, so we do want to see how these markets react. So I suppose we can keep it in keeping really with the others. So we'll prepare for this bit of price action. We'll get our trading accounts open just in case we need to pulled the trigger relatively quickly. We're not news traders, so we just want to make sure if the news is in keeping with kind of the overall view, then we look to get into the trade. So we're not actually trading the news, we're trading, I suppose, the sentiment behind the markets. So finding the fallback price to the right level catches me out, be it 4 hour or 1 hour. Yeah, which level do you pick? Okay. It should be relatively easy to determine. So, this is quite difficult on the 15-minute. I appreciate that. So what we can do is then look at a slightly higher time frame. And now what we're looking at, if I just quickly get this in here, now we're looking at strong level of support and resistance in at this level. Would you agree that that's the case? So that's really the major level of support. So you could argue, and this was really the reason why our entry was where it was, around the 108, 109, 110, because it was a confirmed break out of this level of support and resistance. So this is when we're moving sideways, we're consolidating, and this is your breakout trade. So now the pullback should be in and around that sort of 1810 level. Now we'll absolutely settle for 1813. It's only sort of $2 or $3 above the level at which we would expect. So yeah, you could monitor it at this level, see if it squeezes back to the 1809, and then if it starts to turn around, you could look to sort of buy anywhere in between that 109 and that the 1809 and the 1813 level. Buying around that sort of level can stack up. So really what you can do is you can do some multi-time frame analysis. If there's a lack of clarity, and I agree there's a certain lack of clarity in this market on the 15-minute time frame, just look at it on the hourly, and it might sort of clear up some of that hesitation. So I mean, as you know, like, we do use a multi-time frame analysis, so we're always looking from higher to lower, and sometimes a lower time frame can just get us in at a very particular point. So if prices in gold pull back to that 1813, pull the trigger on it. So I hope that makes sense. Right, so I think the figure is out now, so we're getting a bit of movement.
It's in the US advanced Q2 consumer spending coming in up 11.8%.
So we're getting the dollar. The dollar's clearly moving. I'm sorry, we just missed that news event. So let me just see what the figures are before we can make a decision. And I turned off our squawk as well. Okay. Oh, that's interesting. So actually a significant miss. And 18,000 more unemployment claims than expected. Okay. That's a significant miss.
I've seen the GDP price index coming in at 6.1%.
Okay, that is interesting. We're seeing these markets make technical moves to the upside. One market I would like to just have a quick look at would be your S&P 500. Very muted response from the S&P. A little bit of selling.
Core PCE on the quarter, 6.1%.
Okay, that's a very significant miss.
Just to recap all that, GDP annualized quarter on quarter at 6.5%, personal consumption at 11.8%. The GDP price index came in at 6%, with core PCE on the quarter coming in at 6.1%.
So I suppose what this is telling us is that a GDP number would be quite good. If we were up at the 8.5%, would be quite good for the US dollar. It came in less than expected, so now we're seeing these markets just continue to push. So, let's go with the Aussie dollar. And
seen a revision to the prior quarter for GDP, revised down to 6.3 from 6.4%.
Okay, that's a decent initial move. Hans, good afternoon. The moment Wall Street has been waiting for. Retail is all in, zero hedge. Yeah, I'm just wondering if you could explain that a little bit. Retail is all in. I'm not sure what that means.
Looking further into this report, we see spending on services moved higher at a 12% annualized pace, while we saw residential investment spending tumbling 9.8% at an annualized pace.
Okay, so look, we're gonna add a couple of these trades then.
We see trade and government spending were both dampeners on growth last quarter. Combined, they shaved 0.7 percentage points off of growth.
Right, let's get into the euro dollar. With a stop loss of the 49.45 level. Okay, so we'll get into the euro dollar to the upside. Right, the dollar Swiss is very much a viable trade. $18.45. So that is a. So there's our entry price, and there's our stop loss for a euro dollar trade. So it's a bit of a miss, and I'm surprised the Squawk service is so quiet, because maybe they're just digesting that news event and trying to work it out. So broadly speaking, we've got dollar weakness across the board. The gold pushing higher. And there's still this risk on market conditions. So really, yeah, the dollar sell trade for now certainly seems to be where the opportunity is. Gold is just taking a bit of a roll over to the downside. Yeah, Hans, thanks for your comment. Yeah, retail is all in. I'm just interested to find out perhaps what you're referring to. Like, retail traders have been flocking to trading financial markets, and what's quite interesting, and we kind of observed that the terminology that's used when retail traders enter this environment, and it's basically around the fact that, you know, people are flooding to this to make some extra money, as if everyone that does that is able to make money, when the reality is, you know, probably 10 to 15% of those that enter this environment can make consistent returns. The vast majority end up losing their money. So it's not a case of like, oh, something for you to try to actually, you know, to make money every week. It doesn't really work like that. So, and that's obviously a lot of the interpretation that many have about this environment. It's a skill. It's like learning how to play tennis or to play golf or any other sport you can imagine. or learning any craft of any kind, woodwork, whatever the case may be, you've got to put in a bit of time and effort. Those who know the least, unfortunately, lose the most in this environment. The more you know, the more you can try to position yourselves accordingly. Certainly, the more comfortable it gets and the easier trading becomes. It definitely gets easier over time. It's very, very daunting to begin with. We do appreciate that. Very daunting environment. It can often give you this sort of impression that it does exactly the opposite of what you do. But that's something that does get an awful lot easier. The more, and probably the reason why you feel that the market does what you do is largely because of these markets have their own psychology, and by that a lot of those who participate in a particular market can make the same decisions. They can enter at the same place and they can place their stop loss at the same place. So if there's a little bit of market manipulation, it can take the vast majority of people out at those levels and at those times. So the problem is with the dollar Swiss and the euro CAD, it's a mirror sort of image of each other normally. So if we get the euro dollar pushing higher, we're probably also likely to get the dollar Swiss to push lower. We're not getting much follow through with the Aussie dollar, unfortunately. So we'll probably look to position ourselves again if we look at these opportunities.
So looking through some of these analyst responses to this data, they say they are seeing fantastic demand being held back by supply problems.
That's that supply chain thing we were talking about earlier. Okay, so we got into the euro dollar to the upside off this very strange GDP figure out of the US. So we're expecting 8.5. We got a 6.5. So we're seeing the dollar continue to weaken off the back of it, which is, I suppose, it's a prudent position. Unemployment claims a lot higher than anticipated as well. And we'll be running these live trade rooms for about 4 hours every day from September onwards. It's something we were doing sort of pre-pandemic, and now we're bringing those back. So for more information, you can always go to our website at thelivetraderoom.com, and we can certainly help you navigate these markets, every single day for those of you interested in day trading, of course. And do contact us through our chat function as well on the website if you've got any questions. So clearly the markets are trying to digest these figures and try to understand what they mean and how they can position themselves. A little bit of uncertainty creeping in. So as a result, guys, we do have to move to our another trading room. So I will let you guys go there. Those are the 4 markets we're focusing on. 3 are dollar pairs, the euro dollar, the dollar Swiss, and the Aussie dollar. These are the trades, buying and selling, and these are the levels and prices at which we're looking to get in. So we've got a green light on the euro dollar. We also have a green light on the dollar Swiss. They're both mirror image trades, so just know that you're doubling up if that's what you're looking to do. And the Aussie dollar as well. Just at that 7,400, it's just having a little bit of a pause, so a lack of clarity, I guess. Yeah, can we have a look at the Dow, the DAX, and the Nasdaq? Can you active trade the Dow, DAX, and the Nasdaq Yeah, so it's just our focus has not really been on the indice markets. Drifting sideways. The Nasdaq today, a little bit of indecision so far today. It doesn't probably know how to interpret that GDP number. A lot of it supply chain related. There's literally lack of supplies. Yeah, the Dow Jones just up at these highs in here. Yeah, Hans, we absolutely can. We've been discussing about the markets because we've been looking at these markets now, 16 markets for quite some time, and you know, trade selection is something that traders have a huge amount of difficulty with. So we've always looked at like an S&P, the FTSE, the DAX, and the Nikkei. So you get a bit of a spread, a bit of diversification across these. But if you're trading the S&P, the Nasdaq, and the Dow Jones, they don't always have to be correlated, but they generally are. So they're in slightly different phases. But yes, cut a long story short, we'll be looking at multi, like the I suppose off the back of yesterday's FOMC, the focus really became the gold trade to the upside, and also the dollar weakness, which has begun to kick in. But yeah, we do monitor all these markets all the time. The DAX looking quite positive, very close to all-time highs. The FTSE, we're a little bit off, but it's certainly getting there, and the Nikkei as well is looking a little bit on the positive side. It's just our focus has been on other markets today, but in simple, yes, Hans, that's absolutely what we'll be doing again from September. Bitcoin just hanging around these highs. Just to comment on what's going on in Bitcoin, it's purely consolidating with a lot of sort of a significant uptick in the last few days, as you can see. So it'd be interesting to see what happens with Bitcoin. So the euro dollar, we're getting a pullback of sorts. It was the Aussie dollar, wasn't it? Yeah. So we're getting a little pullback of sorts. So we're okay with a pullback if it pulls back to the 1860 or whatever. We're hopeful it might find a little bit of support in and around that kind of price. So let's see what happens. We'll hold fire on the dollar Swiss then until we get slightly better trading opportunities to get into it. And on that note, guys, thank you very much for joining us. We'll need to shoot off, but we'll be back again tomorrow, see what opportunities we have for you from sort of around 12:30 onwards. So if you can join us through our YouTube channel, that would be great. Do give us thumbs up if you can, if you've obviously enjoyed the trading session, and subscribe to our channel, and we'll be notifying you when we come back from our summer break. Market conditions are often a lot lighter during the month of August, so we'll be back in September, all guns blazing. And if you want to join us for that, just subscribe to our channel. We'll notify you when we go live, and we've got a whole range of products and services going live in September, which we continued, unfortunately, with the whole COVID situation and lockdowns and all that kind of stuff. We had to continue to postpone, so it's been a bit frustrating for us on our side. But we'll be fully active now from September, and we're moving offices as well, so that's all good news. So look, for everyone here at the live trade room, thanks very much for joining us. Thanks so much, Hans. We'll speak to you soon. For everyone here, bye for now.